Hello everyone, welcome to the live show. Welcome back to a wonderful show with Rob. We're going to talk about the markets in general today, as the markets are correcting absolutely fantastically. I see Carlos has already had a comment here. How's it, Carlos? Welcome. And you did note, welcome to the members only research. And I'm going to show you how the trade of the day has actually changed slightly, but we'll get to that. The questions that I got this week, I'm going to go over them during the course of this session, and we'll have a look at it. The main thing is somebody asked me, why are we using an example of a $100,000 account when most people have only got $5,000 or $10,000? And well, I don't know about that. I couldn't possibly tell you for sure if that is the case. How's it, Elaine? Good to see you again. But yeah, okay, I'll have a look at that, and we can work on lower figures. I use the 100,000 analogy because I'm used to it, and because it's a round figure. It's a nice round figure. But if you want to use a $5,000 analogy, I can do that too. Then somebody asked me, how do I determine if something's overbought or oversold without an RSI, or do I use the RSI? So I'm going to go into a little bit of detail on relative strength indexes. How do you find supply and demand was another question. There are videos on that in the series, but I'll cover that as well. I'll just go over it during this live show. How do you draw the rectangular, the lines, the bars, these support and resistance areas on the line chart, and why is it done on a line chart? So we'll get to that as well today when everybody's here. And also the trade of the day, how the format is now, and the overbought and oversold situations. How's it, Roy? Welcome back. Good to see you again. I believe it is Halloween in the USA, so I don't know if you guys are working or if you guys are just celebrating today, but great stuff. We'll see how we go. See how many people turn up for the show. So I am going to go over a few things, like I said, and one of the big things, of course, is how the format of Trade of the Day looks these days. So what I'm doing these days, guys, is I'm putting this out to the members. This is the Trade of the Day, and instead of having all these figures on the blog, and it takes me a long time to do that, so I'm still going to have the blog link where you can go and you can see what the Trade of the Day is, but I'm not going to go into a lot of detail on it. So all the detail is going to go into this members post, which is the price to get in, the stop loss, the take profit, that sort of thing, and then of course the video every morning that the members get as well. So that's going to be the Trade of the Day from now on. There will be still a Trade of the Day available. You can go and see what it is, but I'm not going to put all the details in, because I'm running out of time when it comes to all these different things that I've got to do these days. So I'm just slowing that down a bit. So there is still Trade of the Day, but like I say, I'm doing it mainly for the members, and I'm putting the video out for the members every morning and that sort of thing, and that takes up the time. So the actual blog just gets, it's the FTSE today or long, whatever the case. It's not going to have a whole story or a whole bit of information behind it, or anything to that effect. That will be done on the members video. Okay, so that covers that. How's it, Stephen? And greetings from London. First time here. I've been watching a lot of your videos. Welcome. Hope you enjoy it. Got any questions? Shoot. Like I said, we are going to go over a couple of things that are quite important that we need to cover. So the first question was why are we using the figures like $100,000 when people have only got $5,000 or $10,000. And as I said, I don't know how true that is, but all you have to do, if you don't have a $100,000 account, if you've got a $5,000 account, just equate it to percentage. So if you're risking $1,000 per trade on a $100,000 account, which is 1% of your account, then you simply risk $50 on a $5,000 account. That's effectively what you do. You risk 1% on a smaller account, and you make less money because you've got a smaller account. It makes sense, kind of, doesn't it? For example, the funded trader account, is a $25,000 account was, and there you risk $250 on a trade, and that's about as simple as it gets. And then somebody asked me, how do I determine something oversold, overbought without the RSI? You know, I just look at a chart like this and I see this and I think, well, that would have been quite overbought, and but it won't make me counter trade it unless, of course, it breaks the structure. Once it breaks the structure, then you'll counter trade it. The same sort of scenario for this. It's going down. You're going to counter trade it when it breaks the structure. So I'm not really worried about overbought and oversold. But I mean, if you want to put an overbought and oversold in, this is most definitely, this is the DAX, and or the Germany 30, Germany 40, all the same. Now, this is definitely oversold. I mean, clearly it's oversold. It's in an oversold position. It's hitting down this bottom, and we know it's there, but we're not going to do anything with it unless, of course, it breaks the structure and heads back up. How do we determine if it's breaking the structure? You can draw a trend line in here, see if it breaks through that trend, and also you can effectively watch for it to go above the highs. So, you know, how do I determine an RSI? If I want to put an RSI in, I can simply by a relative strength index. There you go. There's a relative strength index. And exactly as I said to you, you see this one here was definitely overbought. It had gone through the 70. When it's above the 70 like that, it's most certainly overbought. And this one is most certainly oversold. There it is down there below the 30. So that's definitely oversold. If you want to use that in your trading, you most certainly can. Some people use it for divergence. If this is going the opposite way to the price, then you get a divergence, and you can trade divergence if you want to. But you know, I don't like to confuse our trading with extra indicators, as you guys know. I like to keep it simple as much as possible. So don't overtrade, don't confuse yourself with these indicators. Good afternoon, Kokoro. Good to see you again. Welcome back. Like I said, I wonder how many people we're going to get here today, because I believe it is a bit of a celebration in the USA, and this is normally the USA Open. So anyway, we'll see how that goes, and we'll see what happens. And then, of course, the other question that I did get, and I'm just covering all these questions so that that's behind us and it's done and what have you, is how do you draw supply and demand? And like I've always indicated to you guys, is what you got to do is, let's use this funded trader markets one again, because I did draw them in here. If you get 3 clear candles, for example, in this case, there's 3 clear red candles going down, and it's after a small little blip of a green bar over there, that indicates that there's money lying there, and that will be a supply level. On the opposite side, it would be a demand. It really doesn't matter what you call it. What it is, it's a whole bunch of orders lying there. And as I've said to you guys 1 million times, this is not about squiggly lines. There are human beings behind this that are trading, and that's what you're looking for. You're looking for those orders. You're looking for where that money is. Now, here, there's another bounce here, and that will indicate that there's orders lying in this area as well. So there's a supply of money there. So what you're looking at here, when you get an area like this where there's good red candles that have come after that little green bar that was trying to go up, it shows that there were orders lying here. There is some orders lying in this area. So what you're looking at here is effectively this going back up in there, taking the money, and then continuing on short. So that's how you look for supply and demand levels if you want to include that into your trading. Many people do like to include the supply and demand into their trading. You can also include the fair value gaps. There's a fair value gap in that area there. It's the distance between that and that where they don't touch each other. Then that's also in that blocky area very close by. You could actually draw this supply area very much from tail to tail as well, which would make it a very fat area full of money, and that would include that so-called fair value gap. But fair value gaps is very much an ICT thing. It's not a big thing, and they are there, but don't put your entire world into fair value gaps. Don't put your entire world into that sort of scenario. Just keep it simple and just trade your support and resistance. And for those of you that don't know, this particular account is a phase 1 challenge with funded trader markets. If you want one of these accounts, I have left a link for you in the description. They are offering major discounts, and the reason I'm trading with these guys is because you guys wanted to know if you could do this on a funded trader account. My main accounts are with cash and they're on MT5 and that sort of thing. But this is very much to see if we can pass this challenge ever, and if we can do it in a slow way. And the main reason I'm using these guys rather than other funded accounts is because they do allow you to keep your trades overnight. They allow you news trading. They allow you to keep it over weekends, and they allow you to trade your own way, which is quite important, at the end of the day. So that's one of the main reasons we're actually using them, is because they allow you to trade your own way. Hello, Eddie from Pakistan. Welcome. Yeah, sure. We got people from all over the world on this show, and it's actually amazing. We don't have the thousands of viewers that the other guys do at the moment, because those guys are doing the 5-minute charts, and that's more attractive and showing you guys that you can make millions in a day and that sort of stuff. And that's obviously much more attractive than my show, which tells you that you're not going to make $1 million in a day, and we're going to do it the proper way and the slow way. And we're going to learn how to trade like proper traders, and not try and think that we're going to do it through some backdoor, some casino sort of scenario. So yeah, that covers supply and demand. Drawing lines on a line chart. Why do we do it on a line chart, right? So what I like to explain is the reason I take it to the day chart, number one, is because the day chart gives the most reliable information. Now, I'll just use this chart again because it is open. So you go to the day chart, and that gives you the most reliable information on any given day. So you know that you've got a daily level. Now what you do is you take it to the line chart, and the reason I use the line chart, why do I use the line chart? Because the line chart is closing prices. The candles give you highs and lows. These tails are highs and lows. They show you where the sellers and the buyers are coming back into the market. And that's what they're useful for. And the candles are useful for if you want to take a trade, see the green bar coming out of the support, you know it closes, you know it's a long trade. The red bar coming down from the resistance, you know it's a short trade, that sort of thing. You can see the tails where the buyers and the sellers are getting in and out of the trades. You can see the size of the candles and how much activity there is on a buy or a sell side. Now, if you see a load of big green candles going up and lots of tiny little red candles, what does that tell you? It tells you that it's quite bullish, that there's a lot of buyers out there trying to buy in the market. But we draw the lines on a line chart, or the areas, the support and resistance areas, the supply and demand areas on a line chart, because you get the closing prices, and then you get a decent level, and you get a proper level. The supply and demand you have to draw in the candles. Sorry, that you're going to get from that little green bar, and that I normally take from the lower time frame, because that's an inner time frame sort of trade. What I'm looking for on the day is major levels, major direction. Once you've determined your major direction and your major levels off the day chart, then you can look for levels within your time frame that you're trading, whether that be the hour, the 4 hour, or the day. Now, just remember, I am from Sri Lanka as well. Welcome. It's good to have you. What I noticed, I was looking at someone trading a 5-minute chart earlier, and they were long on the DAX, and I was looking at that and thinking it's quite interesting, because it was a losing trade firstly, and clearly the DAX on the day and on the 4 hour and on the 1 hour and a number of other time frames is bearish. But when you go to the lower time frames, you're trading on the open and you're trading on these different systems, you get a different picture. But you're not looking at the day frame, which is a different picture, and it's telling you to go in another direction. So I think lower time frames, that's probably why 99% of people do lose trading lower time frames, because they are more risky and are more tricky. Sorry guys, I got my coffee with me today, because I do get thirsty from time to time, and I sit here and dry out. And you'll notice I got the microphone in a different position now on the stand, and looking a little bit more, like it's going to do something. Hopefully the sound is okay for you guys. I've been working heavily on trying to get the audio right. I'm not an expert techie just yet, but I'll get there. One of these days I'll be qualified as a YouTuber. I'll be a proper YouTuber like all the other guys. And just like you guys will be proper traders, because it takes time. I mean, I'm pretty sure that you can't learn YouTube in a day. I'm proof of that. And it eventually, I'll get there and I'll figure it out with a lot of help, I suppose, and a lot of information from other people as we go. And then, of course, so that's how you draw, why we use the line charts and why we draw on the line charts. So those questions, for those guys that asked those questions are now answered. Thanks, Kokoro. Those questions are now answered, and they are now back on form. Because, you know, these guys ask the questions, but there are lots of videos. I mean, I don't know, I've got a good few hundred videos already. I've been doing this for what, close on 7-8 months now, maybe longer. And the videos are there. I have done supply and demand. I have done, and I've mentioned over and over again why we draw the line on the line charts and why we don't use other indicators and so on and so on. But you know, when guys are new to the channel, they don't know that. So I'm just repeating myself and going over it again. And it also helps for the guys that do follow me well. You know, you guys, and you know me well, to keep reiterating it and reminding yourself and remembering what's the best way to go and that sort of thing. How's it, Matthew? Hi, Rob. Just joined the chat today. Fantastic. Good to see that you've joined the chat for a change. Yes. Do ask your questions. There you go. It's good to have you on board. And I enjoy chatting to you guys because, you know, as I've told you guys before, and this is one thing you are going to find out, is that trading is a lonely game. If you just trade, if you only trade, if you do nothing else but trade, it becomes a very lonely game. So what YouTube has done for me is it's giving me an outlet kind of with you guys to, and it makes me feel a hell of a lot better about my day, to be quite honest with you. Even though I've been doing this for 30 years, I do have people around, and I've had WhatsApp groups, and I've had all kinds of things going. But this is great. I love this. Do you always draw the support and resistance on the day chart? Yes, absolutely. Day chart. The reason I take the support and resistance from the day chart is because that's the most reliable level for those kinds of levels. Even your main trends you take from the day chart. You can take a small trend. For example, you can take this trend here to see if it's going to break structure, right? So you can draw that in if you want to. There's no problem with that. That's on the 4 hour. Then you know there's a trend there. I mean, you can see the trend. You don't really need to draw a line in, but sometimes I'll just take a line like this and I'll just draw it across here just for interest's sake, just to see something, you know, whatever the case. And then maybe take it out if it'll ever come out. Maybe it doesn't want to come out. I actually don't know. Now that I've drawn it in, there we go. Maybe it's my mouse. I don't know. But yeah, anyway, so just out of interest, I do that, and on the lower time frames. But on the major time frames, what I actually do is I'll go to the different instruments, normally on my MT5. This is TradingView, and I'll go and I'll draw my levels in. All my levels, and my levels will stay there most likely for the whole week. But, you know, you can check on a daily basis, but they don't change that much on the 4 hour. They kind of stay in place, and you know your levels are generally okay. And then that level is there. And all it is for you is that's your picture, that's your support, that's your resistance. You know where it is. It's there. It's not going to change very soon. And in certain cases like this US 500, we had a trend support running through there. It's broken that. It's broken through that trend support. In fact, it's broken through that level as well. So you can now remove those. You don't need them as such. So you can like take this and remove that. We don't need that in there. I do like this line here. It does tell me that we've got very much the flag pattern is breaking. So the flag pattern's broken. It's coming down to your what was a resistance that it broke through. It's coming back to this level again. So now it's going to be interesting to see, is it going to now bounce off of this as a support, or is it going to break through it and start heading to the short side? And as I said, was it yesterday or the day before, it just feels like the winds of change are here. It just feels like something's going on in the background. There's this whole feeling that things are sort of falling over, and maybe there's going to be a little bit of a correction. So a correction can be quite mean sometimes if you're long. So just be careful. And that's why I always emphasize the stop loss. It's really important. Okay, so the leverages are normally around 10 to 1. So, you know, it doesn't matter what broker you go to, you're going to get a lot of 10 to 1s, especially on the Forex, eh? On the Forex, you get always 10 to 1. Which is fair. Okay, so, okay, that's on the cash account. I'm actually, you know, I'd probably be lying to you on the funded account, because you know what, guys, I actually opened this because we wanted to test it out and see if we can do it on a funded account for fun. And I actually never checked that, to be quite honest with you. I know that the spreads are a bit wide, and I know there's a few things that are a bit off, but I'm actually not 100% sure if the leverage is 10 to 1 on this. I think it is, though. I think it should be. But yeah, on the main accounts, it is. On my MT5, it is, yeah. On those South African accounts, they are 10 to 1. Yeah, well, you see, if you have a situation like you say, so in a highly extended market, how do you determine levels? And you know, this is often a question for guys that don't know, right? So you're looking at a market like this. So what I always tell everyone, Eddie, is there's 3 ways that we trade. We trade in a trend. The trend is your friend. We trade in a range. There's your range. And of course, with a range, it's easy to determine your levels. There's a high and there's a low, and it's staying in that range for yarns, for years, forever, you know. So it's broken out of that range now and it's heading to the downside, but that's a range. And then we counter trade, right? And the counter trading is if it breaks structure, then we can counter trade. So for example, if this now breaks structure on the DAX and it goes up above those highs, then we can start taking the counter trade and going long again. But how do we find levels in a market like this where it's just going up? So what you're looking for with support and resistance on a steep trend like this is trend support and trend resistance, because what you've actually got here, for example, and let's just put it on the day chart. Let's do it realistically. And let's just have a look at what we've got here, right? So now that's your US dollar, Canadian dollar on a day chart. And if I look at a day chart on the US dollar, Canadian dollar, this would be in a range. It's not even in a major bullish trend or bearish trend. This is sitting in a range. So you could literally draw your resistance at the top here, and you could draw your support at the bottom there. So what I'm going to do for you is I'm just going to say to you, okay, guys, let's just use this as an example. Let's say this was the day chart and it's a 4-hour chart. I'm just going to say that for an example so that Eddie can get an idea of how do you find levels if you don't have that range, if it's just going straight up and there is no top, let's say. There is a bottom. There's always a bottom. But is there a top? Maybe it's at an all-time high. How do I know where it's going? So quite easy, you know, then you put it on the line chart, and then what you do is you just put a trend support, and you just take a trend resistance and put it in, okay? Now, everyone will tell me, you need 3 points for a trend line, you need 3 points. Yeah, okay, you're right. But in all the years that I've been trading, I know what a trend looks like, and I really don't need 3 points to tell me that that's going bullish and that's the trend, okay? And look how close that one is in any event. So that would be almost 3 points going up. So now you know where the high might be, right? It's not to say it's going to get there, but if this now decides to go up, it'll probably go up to one of these levels here, and now you've determined a level on the high side. So now you know where your higher level is. That's obvious, right? Where's your lower level? Your lower level is in this area, and that is because if you go back long enough, you can see that it's hit this area a number of times, going up and going down. It likes this area. It's like a magnet. So you just look for that magnetic area. That gives you a sort of indication of where there might be some support. And there at the bottom is your main support area. So there it is, right at the bottom, waiting for you down there. So you can determine levels on a chart that's ranging as well. So it's not impossible to find levels. So, because you're always looking at it. Don't just look at things in straight lines. Don't forget you've got trend support and you've got trend resistance as well for those things that tend to go the other way. I just used the 4-hour chart there, guys, just to show Eddie how you can pick up a level from a chart that's just going in one direction, for example. And we all know the US CAD did that the other day, but it did it on the 4-hour. But if you look at it on a day chart, you look at it on a weekly chart, you can pick up completely different levels. I mean, you can go into a weekly chart as well, and you can have a look at a weekly chart, and you'll probably get a ranging level there as well. So just for information there, so that you can figure that out. And then also look for supply and demand levels like this. There's a demand level there, so if it comes back in there, there's money lying in there, it's orders, it'll come back, take that, and go back out. Just remember, guys, don't forget, as I always tell you guys, it's not about these squiggly lines. It's about there's money in the market. There's buyers and sellers in the market. And the market is a 50-50 game because it's filled up with buyers and it's filled up with sellers. And everybody's buying and selling. And guess what? Absolutely none of them expect to lose. Everybody expects to win. Otherwise, you wouldn't be here. Why would you be trading if you expected to lose? Now, why would you think that you'll be better than a pro? Or that somebody else is going to have a worse system than you? That's why it's a 50-50 game, guys. When you take a trade, it could go either way. What you do is you base your trade on probability, on past history. So you're looking at what's happened before, and in all probability, your trade is going to go in that direction. And that's what we're all looking for. It's not a casino. We're learning how to trade. But what makes you profitable at the end of the day is the psychology behind it, how you manage the risk, how you manage the trades. And we go into detail in that on many of our videos. As you know, we've spoken about that at length on many, many occasions. See, the DAX is trying to make a break for it. We'll just keep an eye on that, just in case. Yeah. I learned yesterday that Fundamental has a trailing stop loss. I learned that the hard way. A trailing stop loss you have to set. You have to set the trailing stop loss. So you can set this trailing stop loss by putting it in. It's on every single brokerage account. It'll be on TradingView. It'll be on MT5. I use it on MT5. And you can set your trailing stop loss in that it can follow your trade up. But I actually trail my stop losses manually if I can. The only time I'll set a trailing stop is if I just can't manage it. If I have to go to a hospital or something, and then I'll leave a trailing stop in. But otherwise, I don't leave trailing stops because they follow it up by itself. And the thing that markets do, especially when markets are like this, they're a little bit iffy, right? And you get these big bars that go up and down. You see this is like there's a whole bunch of buyers that got back into the market here while it was going down, and your trailing stop would have been following it down, goes back up, takes out your trailing stop, and then carries on down. Trailing stops are a bit of a pain. So I like to try and keep my stop just where I feel the market and put my stop in enough distance behind it if I can. See, I've had this question many a time, Matthew. How many trades would you have running at any given time? And as many as I can, but generally 10 is nice. I mean, if you can get 10 trades in, that's great. Because the way I look at 10 trades is you're risking 1% per trade. If you've got 10 trades in, you're risking 10% of your account. But if I want to put trade number 11 in, no, there's not a force field that's going to stop me. No, I'm going to put it in. Because if it's there, I'm going to take it. So I'm not going to be held to any specific rules. The guys that know me will know well that I break rules specifically for that reason, because why should I only have 10 trades when I can have 12 or 13 trades if I want to? So yes, 10 is a nice figure. It's a figure that works, but there's no specific rule. If I see trade number 11, trade number 11 is coming in. Where I do hold rules is when I trade on this funded trader thing where there's no trades at the moment, and there's a reason for that. And that's because things are a bit iffy at the moment, and I'm just waiting to see which way things are going. So I'm out at the moment on everything. So yeah, you might find that strange, but don't force trades. Wait for the trades to come to you. Things are not going or not clear as we stand at the moment, so we're waiting for some clarity. Then we take the trades, right? Simple as that. Don't jump in because you have to, and that is a big problem. When people really need money, they jump in because they have to, and then you end up losing more than anything. So yeah, 10 trades is fair, but when you come to this funded account, I found that, and this is why I took the account in the first place, is because people said it's difficult to trade them, and it is a bit different. I found that I can take maybe 4 trades at a time because I'm risking 1% at the account, and clearly something is going wrong with my system. We'll be back in a sec. Sorry guys, things went a bit awry there, and I'm not sure where it went off, but here we are, we're back. I hope that's okay. Sorry about that, dudes. Okay, sometimes these things happen. Alrighty. Okay, so we're back. I'm not sure where I ended off though. Matthew, I was trying to, how many trades would you say you have running at any given time? Now I was talking about this funded trader account, for example, here. This is actually quite a big problem, because if you take more than 4 trades, you're only allowed to lose $1,000 a day on this account, which is 4%, and that makes it a bit tricky, because if you take 10 trades on this, you're going to have to take a much smaller risk. You're going to have to take like 0.5, 0.3%. So what I learned with this is you can maybe take 3 or 4 trades, and then if you've got one where you've moved your stop loss to break even, you can add another trade. So funded trading is a little bit more complicated because of their drawdown rules. So just be careful of that. Just watch out for that on the funded accounts. Just watch your daily drawdown, not your overall drawdown, your daily drawdown, because that's important. Because what will happen, 4% is not a lot. Because I'm working my main accounts on 10%, which is fine for me. But the funded account works on 4% per day. So watch out for that. Don't get caught out by that scenario. Right, so, okay. At least we're all still here, and we haven't died off completely. And then you asked the leverage earlier, and I did mention to you that the accounts are 10 to 1 generally, okay? Leverages are 10 to 1 in general. So, especially on the Forex, okay? So if that's the leverage, just ask your broker for what leverage you're going to get and what they offer and that sort of thing, and then you work on that leverage. That's all about, and that's why you've got to have your stop losses, because you're trading with leverages accounts. If you're not trading with a leveraged account, then that's my equity account. That's my investment account. Every month I add money to my investment account. Every month I add money to a stock that I own, whether it be in South Africa or USA or wherever it is. And that account just keeps on growing. And you know what I do with those equities? I never sell them. They're never for sale. They're always owned. Unless, of course, I see something going drastically wrong, and in which case I will take that, sell it, and move it into another stock. But further than that, never sell. And to get the dividends from it every year, it grows, and it's just like a pension. That's my equity account. Equities you don't buy and sell. You just buy them and hold them. But leveraged accounts, these are all leveraged accounts. The indexes, even these funded accounts, heavily leveraged. And the more leverage you have, the worse it gets, the more dangerous it gets, and the more you can You can lose your money. The more leverage you got, the more you can lose, eh? Don't forget that. That's very important to understand. A lot of guys don't understand that. It's all about the losses. It's not always about the gain. Everybody always thinks about how much they can make, and it's great to have that positive attitude. But just keep in mind how much you could lose as well. It's very important. So the euro US dollar seems to have turned around, seems to have broke structure, and it seems to have broken that higher high. So that looks like it might go long up to the main support up there. So you might actually get a reasonable trade out of this. And it did come off the trend support here, the daily trend support. That is a daily level, that trend support. So let's just have a look at that. That is a daily trend support that it's bounced off. So it looks like it wants to go back and go the other way. So it looks like your euro US dollar is turning around. But just be careful, because I mean, we've got to look at the Great British Pound as well, because they tend to follow each other. And this is what I was saying this morning. While this looks great, these two tend to follow each other, and this one is not showing any signs of going positive. And the Dixie is also not showing signs of going positive. This one's showing signs of falling over, coming down. There's a triple top here on the DXY, the Dixie. So that would tell me that the euro US dollar is going to go up. But yeah, this has broken. Trade what you see. And you might get, but the risk reward's not great here. You might get a trade up to here, and then she might come down again. Just keep an eye on that. That's quite a useful trade. The US dollar, South African rand does appear to be sort of falling over as well. And as I said in my video this morning, there is a rumor that South Africa might get upgraded, which would make this go down because this rand would strengthen. And of course, the top 40 would go to the moon and fly upwards. So I'm looking at a long trade on the South African top 40. Looks pretty good to me. I'm just waiting to see if this DAX wants to turn around as well. See if that will go long at any time soon. So that sort of covers most of those areas. That is where we stand. FTSE, yesterday we were looking for a long trade out of the FTSE, and guess what? It went short. It broke through the support and headed downwards. So tell me, is there anyone from USA here today or not? Because I'm just wondering, if guys are working. Yeah, the DAX, it is oversold, and it does look like it might want to turn around. But like I always say to you guys, where's the DAX? There we go. Okay, so just make sure that it breaks the structure before you counter trade. You're counter trading now. You're counter trading against the trend. Effectively, it is still bearish. It is still coming down. This is just a couple of candles, 4-hour candles, that are saying, oh, we might go long now, but it needs to go above the higher high before you can determine that it might be turning around and going the other way. So if you do want to trade that, trade with caution. Aha, there's somebody from the US. Aha, welcome. There we go. And Stephen, perfect. Right, great. So you guys are working. That's good. How's it? Yeah. By the way, top of the morning to you. Yes, to you too. Don't forget, it's afternoon with where I am, but that's fantastic. And that's why I'm asking if there's anyone from the US here now. You guys have got yourselves out of bed and got to trading. Oh, there we go. The Head and Shoulders, Matthew. Yes, I'll explain it to you now. Florida, yeah. You guys avoided a big one with Milton there. Joe, that was hectic. So welcome, Scott. Yeah. Florida. My buddies were living in Florida. I got a couple of friends that were living there. One guy's a pilot, and he still lives there, actually. And the other guys moved up to Oregon. What? Can't remember the name. Yeah, but he moved away. He moved away from Florida. But yeah, Florida is a wonderful place, fantastic place. I believe there's a few South African dudes there as well, living around there. Okay, the head and shoulders. Actually, look, there's a kind of a head and shoulders there. So what it is, Matthew, is you get a picture like this, very much in a flat area. It runs up, and then you get a shoulder that develops. It looks like that. And then you get a head that develops, which is slightly higher than the shoulder in the middle. And then you get another shoulder on the right that develops pretty much in line, okay? And if it breaks past that level, what it will do is it will take the length of the head and it'll project it down and it'll go down to that level. So you could even say that this was a head and shoulders that maybe played out. There's a shoulder, there's a head, there's a shoulder, length of the head, right down to this level, broke through, but it actually went up and broke the head and shoulders, so it didn't really count. Had it not gone to this level, then it would have been a straight head and shoulders, but this doesn't count actually because it went up and actually broke that high. But yeah, normally what it'll do is it'll break downwards. Let me see if I can find one in here that makes any sense. Any head and shoulders patterns. Do you guys know of any head and shoulders patterns of recent? I haven't seen one recently, I don't think. Oh yeah, there's one on the, no, that one also broke. So no head and shoulders there. Yeah, but the concept is pretty straightforward. I don't have one in front of me to show you. You get them upside down as well. Inverse head and shoulders works the other way around as well. But if you get the concept, you can let me know. That will help. But yeah, I'm not finding a nice one to show you. I would like to show you a nice head and shoulders. But effectively, what it is you get the scenario where you get a shoulder, you get a head, you get another shoulder, the price breaks down, and it breaks down the same length as that head inside that head. When you see a head and shoulders, those patterns normally play out. They're normally quite tricky. Download yourself a little sheet off Google. They are on Google where it gives you the patterns, chart patterns, and you don't use them to trade. In fact, a lot of people do, but I don't. I use them just to, if I spot it, it just says to me, okay, this is what might happen, and then I can work around that. And head and shoulders is one of my favorites. Okay. You are right. They are quite easy to see on the line chart. I can actually see them on the candle charts, but yeah, you do see them nicely on the line charts. You're quite right. If you look at a line chart, there you go. There's the shoulder, head, a shoulder. You know, it's there. It's kind of a head and shoulders. They're never clear, but once you spotted that once, you'll see it forever. It's like sometimes you see something, you just can't unsee it. It's always there. You get cup and handles and all these different things in the markets. Scott, yeah, I'm in Cape Town. I live in Cape Town. The best city ever. It's like, what a pleasure, dude. I'm not moving ever. I love it here. Totally love it here. Best ever. I love Cape Town, let me tell you. So many nice people, so many things to do. Yeah, it's fantastic. Nikkei, the Nikkei 225, which is basically the JAP 225, the Nikkei. There we go. Nikkei. There you go. Okay. So my thoughts on it is it was long and it's still in trend. There's your trend. Okay, we've done some research on this. And there's your main support, there's your main resistance, there's your trend support running through. It's in a bullish run going upwards on the 4-hour chart, on the dailies as well. And I remain bullish on the Nikkei. I'm not bearish just yet, unless, of course, the markets collapse and crash, which, you know, could happen. You never know. But what I would do right now on the Nikkei is wait for it to come back to trend support and buy again, because it's probably going to come down to this 38,000 level, and then you can buy it again. It's looking pretty much like it wants to do that. So, yeah, that's my call on the Nikkei. Cool. So head and shoulders is on a range. Yeah, kind of you could say that. You see, if you look, there's a line that I've drawn, and at that stage, I was probably picking up a head and shoulders on this Nikkei at the time. And there's a shoulder, there's a head, there's a shoulder, and it played out, came all the way down, played out that length. You see almost the perfect length. If you measure that distance, Matthew, if you measure that distance and you project it, so if you just take, I wish I could, if I just take that line, push it down there, look where it landed up. It landed up almost exactly the length of the head down to that level. And that's how it plays out. And then it's turned around and shot back up. So that's how your head and shoulders basically works, that particular pattern. So it's quite a handy thing to spot in the markets. When you spot them, they're upside down as well, by the way. So if you spot them, don't use it as a 100% thing, and don't let it confuse you and make trading complicated, because too many of us make trading too complicated. We try and make stars align on the left and moons turn to green cheese and stars to align on the right and turn yellow, and then we can take a trade. This is not how we work. We keep it simple. Don't overcomplicate your trading. There's too many systems out there that confuse the hell out of people. And the problem is you tend to, what most people do is they tend to get all involved in the squiggly lines and the charts and the system. And the system is not what makes you money. All the system actually does for you, or the strategies in the market, systems in the market, all they do for you is give you some probability as to how you can take your next trade, and some probability as to where some orders might be in the market, where some money might be in the market, where you might be able to take a trade and manage some risk off of that trade. The way to make a profit in the market is to have a proper business plan strategy, which I've reiterated in my videos for you, which has effectively got nothing to do with the system. It's got to do with how you manage your risk on every single trade. In other words, you risk 1% of every single trade of your total account. Don't let if you've got $100,000 and your account becomes $300,000, don't start trading $300,000. Take the other 200, put it in your bank account, and carry on trading with $100,000 until you are comfortable trading with $300,000. Let me put it that way. Okay, so only when you're comfortable trading with the higher amount do you actually trade with the higher amount. So up until that point, work with your original account size and say, I'm risking 1% per trade on my account. And then your second part of your business plan is just to keep moving your stop loss up into profit and following your price until you get your profit at the end of the day. Now you can go and watch the videos and I'll explain it in more detail there, where you can actually spend some time listening carefully as to how that business plan works. But the whole point is you're not going to make money from a win rate. A win rate is completely meaningless, because a win rate, all it says is you can win a trade. Doesn't mean you won enough money on that trade. You could win $10 on every trade for 9 trades and then lose $1,000 on the 10th trade. And that would just put you in a big loss. And you're not making any money like that. But you've got a 90% win rate. Doesn't make sense, does it? Doesn't make sense to anyone. All it says is that the system can win, but you're taking your profits at $10 and you're taking your losses at $1,000. So, guys, it's not about the squiggly lines. It's not about the system. The system gives you the probability. It gives you the ability to manage your risk, and it gives you the ability to see patterns in the market so that you can take an informed trade and have an advantage in the market, hopefully. But that doesn't mean that you're going to win every trade, and it doesn't mean that a win rate is going to make you profitable. What makes you profitable is having a strategy, a business plan as to how much you can lose on every trade, and try and win more on your wins and lose less on your losses. You need to lose much less on your losses than you win on your wins. So if you've paid $1,000 per trade, if you lose 5 and you win 5, but the 5 that you win 2 to 1, you're obviously going to be in a profit. And that's the basis of the business plan and the strategy behind trading. And that's where the difficult part comes in. It's the psychology of trading, because what most traders do is they learn on a demo. They learn from a course that maybe they paid thousands of dollars for. And when you do the course, you see, well, this looks quite easy. This is not difficult in the slightest. I can do that. And then you go and put real money, real hard-earned money into the account. And that's when it all changes. And that's when your psychology changes. And when you were targeting that $2,000 and you went $500 into profit, you immediately clicked the button and ran away because you saw the $500 profit. You thought, well, that's great. And then it carried on to $2,000. And that's actually more painful than taking a stop loss. So the fear receptors in our brain are powerful, extremely powerful. And you find that when new traders go into a loss, and you go into that loss, they try to hedge it, and they try to double up a loss and make the loss bigger to try and get the money back, and it just becomes an absolute nightmare and turns into tears. So the art of trading has got nothing to do with the system. It's got everything to do with your psychology and how you approach your business plan, how you approach the business from the outside in. You can put 2 traders in the same room with the same system. One will be successful, the other one will fail. And that's how it works. EuroCAD. Let's have a look. EuroCAD. I don't even know if I've got it on my system, but let's have a look. EuroCAD short. Oh, no, it's fine. Okay, EuroCAD. Chris, are you actually short? Looking for a short bar out of the daily range before? Oh, you haven't taken the trade yet. Okay, good. All right, let's just have a look at what we've got on the EuroCAD here before Chris takes the trade. Let's see what we've got. Let me make it a little bit smaller. Let's see what we've got here. Okay, I can see why you're looking at the short. Yeah, that looks reasonably sensible. Okay, I can see what you're looking at there. And let me just have a look at the bottom here. Yeah, there's levels here. Okay. And it is pretty much in a range. All right. Let me give you my thoughts on this. Okay. So here we go. That's your EuroCAD. Right. Okay. Let's put it back on our 4 hours. I presume you are trading on the 4 hours like the rest of us. Okay, let's see what we're looking at. Okay. Now, I agree with you on this short. Totally with you on that. But what I am looking at is it was bullish before it went into this range. So what you have got here is a possible flag pattern, okay? And they normally resolve to the upside. So caution is advised. So what I would do here, yes, short trade, wait for the candle to close. If the candle closes red and short, then you can take the trade. And what I would do is put my stop loss above this level, above the highs. 150, 170, 150, 169. Okay, then you know the trade's kind of invalidated because it's breaking through that level. And short trade with a target 149.50, yeah, or even 140, 150 is a good profit as well. So yeah, I'm with you on that, Chris. That's a reasonable short. And you might be dying to take the short right now because it looks great, but there's 3 hours and 41 minutes left on this trade, on this candle. So yeah, it could do anything in that time. It could turn green and shoot through there. So you really need to actually let this candle close before you take the trade, because you're doing a counter trade and it hasn't broken structure. But if that red candle closes solid, it's a reasonable, let's say a reasonable gamble to take the trade. I like the trade, Chris. It's not bad. Gold has just broken trend support on the 1 hour. Okay. So she's on her way to a correction. on the 1 hour. Okay. Let's see what you got here. It's broken structure on the 1 hour. And it is going short. So what I can see here, broken trend on the support in the 1 hour. Kokoro, what I see here is a possible area here and here where there might be some money lying. So there might be some money lying at 27.65, which could bounce it back up. And the main area is down here, 27.50. I would target the 27.50 area for another long on gold. 27.50. That's where she's going to hit. You can take it back to the 4 hour and probably get the same results. If we look at it, yeah, there she is, 27.50. It's actually perfect. You know, the higher you go with a time frame, the more reliable the information becomes. So now, this is who asked me about supply and demand. Yeah, I just had it in my book here because somebody asked me about it. There's some demand, right? Okay, right there. So that's a reliable area of demand. So what you're going to get here is 27.50. Gold comes back into here, bounces back up, or it goes straight through and then heads down to, I don't know where it goes, right? So, but there's a good chance that it will pick up some money there in this area and bounce back out and carry on in structure onto the upside. So 27.50, watch out for that level. That's a good level. So Kokoro, before you go short, look to go long because it's, look at this bullish trend here, man. I'm not shorting gold, not with your money, sorry. Ooh. I'll short gold if it drops below these levels, then I'll look at it. But above that level, I'll wait for the long trade and go long. That looks good. Scott, you spent, oh, you were in Komaki surfing. Ah, lekker. Oh, yes, you live in Florida, so you know all about the sea, so you're good. You're good. Sea's a bit cold here, though. It is pretty chilly and whatnot, but yeah, that's fine. Wait for the candle close. Yeah, totally. Just be careful there. Eh? Just wait. It hasn't broken structure, so normally wait for the candle close just to confirm that you're going in the right direction, Chris. That's the big thing. Roger, you've taken the message out. So, you know, normally, Roger, you know, when people take the message out, it means you said something wrong. You know, when you get a message on WhatsApp or something and then it's deleted, you think, ooh. Yeah, no, it's brilliant. Brilliant, brilliant. Now you're going to have to give us your message, Roger. We're going to have to see it now. We're all going to have to see it now. We're waiting for it now. We want to see what's on there. Okay, so the FTSE definitely didn't work out for us yesterday. Some of you might have taken the trade, but that was too early. You'll remember I said to you guys, wait for the candle or just wait for it to push out. And then I did mention on the Discord as well that you too many undecided candles here. These were undecided candles. If you get a candle like this, just I don't know if I explained this to you guys before. If you get candles like this where you got a long tail to the upside, long tail to the downside, long tail to the downside, long tail to the upside. Doesn't matter whether it's red or green. It's undecided. It means there's a whole bunch of buyers and a whole bunch of sellers who don't know which way this market's going. It's an undecided candle. It's an undecided, people haven't decided which way it's going. But then it pushed down. You got a lot of sellers in the market and she broke through and now it's pretty bearish. That little guy there tells you that it might want to turn around, but I don't think the worst case scenario is going to come back up here, retest and continue on to the downside. So the FTSE at the moment is projecting a kind of bearish scenario. It looks like the markets want to correct. It looks like, it just feels like the winds have changed. It looks like the markets want to give us a little bit of a breather, which is great because it just gives you the great entry points, especially on the investments. Just gives you a fantastic entry point for everything. So can't wait for that, that's for sure. Oh. Sorry, guys, enjoying the coffee there and it's getting cold. Ah, there you are, Roger. It would be great for those that are new with lower accounts that need to build their accounts. Yeah, I actually mentioned in the beginning, Roger, that somebody did ask about, we always talk about the $100,000 account. We should talk about the $5,000 account. All you got to do is equate it to percentage. So we risk 1% per trade, no matter how big the account. I use the 100,000 analogy because it's metric, it's round figures. It's easy to work out, and I like the figures. You can use it on a 10,000. So if you're risking $1,000 per trade on a $100,000 account, what you're going to risk on a $10,000 account? $100. So that's pretty much what it is. Okay, got less money, you make less money. That's how the world works. But on the funded accounts, a bit more difficult. You just got to watch out for that 4% per day thing. That is tricky. Just be careful of that funded account drawdown monster that they ask. So anyway, this phase one that I got and that I've been trading, that I've kept open, is unfortunately in a loss. We haven't really got it into a profit yet, but we will. I'm not too concerned about that. We'll make it happen. Obviously, I'm not going to concentrate all my effort on there when you're trying to make money with real money. So, yeah, it's like it's almost like playing with a demo account, playing with these funded trader accounts. It's weird. It's a weird feeling. But I've just got to get my head around it. Okay, let's just see. Is there any more questions? No, oh, good. All right, it's peaceful. That's a peaceful day. That's a lot of red candles coming down there off the US 500, eh? I don't know what you guys think. I don't know what you guys think is going to happen. We got NFP today, if I remember correctly. And I know I told you I don't really play much into news and stuff like that, but yeah, there was non-farm payrolls and all that sort of stuff earlier today, and jobless claims. They're never that much different. As I said to you guys, I spent years and years waiting for these figures to come out and trading based on what those figures were. I mean, gee whiz, guys, I used to hang my hat on news, eh? And, when I look back on it now, I mean, I'm looking at this now, the forecast and the actual. I mean, it's so close to each other. And the traders will look at that and go, oh, the market's going to crash now because, and it really is ridiculous. It always ends up going back to where it was at the end of the day. I think one of the most jobless claims, 216 to 230. I mean, where's the disparity? I mean, guys, it's well within range. It's not like it's 400,000 to 230 or 50,000 to 230 forecast. It's pretty close. And then that'll move the markets and everybody will be like, the world's ending. And they don't realize that this news event has actually got nothing to do with the money flow or how much the money's worth in the country or anything to that effect. It's going to move it temporarily and then everything's going to come back to where it needs to be because the money is based on reserves. Oh, that reminds me. Somebody did bring up the crypto money thing and said to me, I called Bitcoin fresh air. I was looking at a Bitcoin thing here, and I said, I don't really trade or invest in Bitcoin because I feel it's a fresh air thing. It's got no intrinsic value. It's not based on anything. So for me, it's a bit of a Ponzi scheme. You're going to wake up one morning and it could be gone. So it's not based on any asset value for me. They talk about blockchain technology and all this rubbish. Who owns the internet? Let's be perfectly honest. So, no, Bitcoin to me doesn't have actual value. You can trade it up and down, and you can make money from these markets because they've made markets around it. And I mean, even the JP Morgans and BlackRocks and that have said there's no real asset value to Bitcoin. And somebody said to me, but the dollar also, you can just print money and it also doesn't have any value. Now, when you say that, understand one thing, that even if the currency of America or the UK or Germany or South Africa even if that currency is digital, it doesn't matter. Those currencies are linked to the country in one way or another. They're not linked to gold anymore. I know that the USA detached from the gold standard, and they no longer have a value against a gold reserve. But your currency value does have a value based on your country's value, your asset value of the country. The country has a value. It has a money flow in the country. The money is used to pay for your air force, your army, your municipalities, your roads, your buildings, etc., etc., etc. There's taxes and all these kind of things that come into play. And the money's in the pot for people to spend and use on a daily basis. It fills up and they can use it. So a dollar or a pound or a euro has a value based on its backing, on its reserves, on its assets. There are assets that are holding that value up. Whereas Bitcoin, what's holding Bitcoin up? Where is your guarantee that your money has any value? So, for example, if there's a war in America and things start happening, then you'll have the value of the currency going down, for example. Okay, and it changes based on the fact that all the money is being used for fighting and the country's getting blown up and so on and so on and so on. So that changes the value of your currency. But Bitcoin is in a sort of AI world that doesn't really exist. So you cannot compare Bitcoin to actual currency. It's not the same thing, right? It just can't be. It's not possible unless you find some kind of asset value for it somewhere down the line. You've got to link it to something for it to be worth something. It's the same as a business. If you buy into Amazon, it's got an asset value. It's worth something. You know, like if tomorrow they had to shut down and sell all the stuff that they own, it would have that asset value. And it'd have earnings and that sort of thing. So, you know, you're buying something that's got physical value. You know, so many people think they're just buying squiggly lines. You're not. You're buying into value. Even if you buy into this DAX, you're buying into value in Germany. All those companies that are listed on this exchange are in this trade, and you're buying into value. You're buying into some kind of value. So you're not buying squiggly lines. And what you're doing with Bitcoin is you're effectively buying squiggly lines. You know what you're doing with Bitcoin is effectively I'm buying against you and you're buying against me. We're trading against each other. That's all. There's no value at all whatsoever. So that's just my story on it, because I did get a comment on that. Someone said to me, yeah, but it doesn't matter. A normal currency also doesn't hold any value. You are wrong. Currencies hold value. They hold asset value. Even though they're not linked to gold, they still hold asset value. Yeah, I'll have a look now. HK50, not sure where it's going. Hi, Rob. Can use the same rules on stocks and Forex? Yes, of course we're using the same rules. Totally. Now, you can trade stocks as well. Totally. You can, for example, this is Tesla. You can more than happily trade this if you want to on geared trading. Most brokers will offer you geared trading on stocks as well. It's just my personal preference not to trade stocks. I invest in stocks. So for me, if I buy a Tesla, I'll buy it and keep it forever. And it's not a geared account. If I buy one share for $1, it costs me $1. I don't pay 10 cents for it or anything like that. So I'm buying it, I'm holding it, I'm keeping it, and that's it, right? So that's how I trade equity. I don't trade it, I buy it, I own it. You can trade it if you want to, just like we're trading indexes, Forex, or commodities. But as you can see here, we are trading Forex. This is Forex. We're trading Forex, lots of different Forex pairs. We're trading commodities. I just prefer gold and Brent as a commodity to trade. Those are my preferred trades for commodities. I don't like trading the other ones. They're a bit slow. Platinum and stuff like that is very slow. And then there's indexes: US 500, Nasdaq, Dow Jones, the DAX, France 40, Nikkei, South African 40, and to mention just the favorites, there's a few others as well. So plenty to trade there if you want to. So no, all the rules apply across the board. There's no different rules or anything to that effect whatsoever. Let's just see which one. Okay. Let's have a look at the, yeah, let's just see the Hong Kong. You asked me about the Hong Kong, so we're just going to ask. We're just going to have a look quickly. Daily chart. Let's just quickly have a look for you. You wanted to have a look at the structure here and where we're going with it and what's happening on a daily chart. And the reason I don't really normally trade this index is because it's out of my time zone, and you know, it's preferable for me to be in my time zone when I'm trading these products as far as I can. If I look at this, it's been on this level for quite a while, and then it broke out. That's interesting. Okay, it's broke out. Okay, well, that's actually a break and retest, which is very interesting on this index. Just be very careful of one thing. The markets are correcting at the moment, and they tend to follow each other. So, okay, so just watch for this. But what I'm going to show you might be of interest. Let's take it back to the 4 hours. Let's take it up. Okay, so here we are on the 4 hour. This is the HK, right? What I see here is it broke through resistance. That was resistance, broke through, shot up, maybe overran itself, two big red bars coming down, two giant red bars coming down, and it's sort of arranged and settled in this area above what is now support, was resistance and is now support. Now there's two things that can happen here. It's either going to break through this and head on down with the rest of the market if it goes down, or it's going to bounce off this support and head on up. But if it does, then watch out for this level where there's a lot of orders lying. Okay, that's a supply of money lying there, right there, beyond those two big red candles. So there will be a lot of orders lying in this area if it goes back up. So that'll be your area back short again. Okay, so it might stay in this range for a while. But if it breaks through here, say goodbye. It's going to kiss goodbye. It's going to go. That's my feeling on the HK. So, and I've only just looked at it. I don't even look at this product 9 times out of 10. I don't really normally trade it. But from what I can see, it's broken through resistance. It's broke out. It's retested. It's gone up, and she's gone up nicely. And then something's happened to cause it to come flying back down. There's a lot of orders and money left in this area, and it's sort of settled around here. And it's either going to bounce off this as a support now, or it's going to break down to the downside. You need a clear signal. And I would say your best clear signal is if it breaks above that high over there and starts heading upwards, then you can go long. Or if it breaks through here, back retest, short. Okay, so that's your trade on the HK. And yeah, what do I think about gold? Well, I think I've mentioned my feeling on gold lots and lots of times. I wouldn't go short on it with your money. Gold is long, and it's staying long for now. It'll stay long until such time as it breaks major structure down here, which is way down at the 27 level. For me, it's going to come down to 27.50 and bounce and go long. That's gold. Silver will follow a similar trend, but it's in a slightly different picture. You've had a big long move going up here. On silver, Scott, your money's lying down here at around 32.15. Okay, so it probably get all the way down to here, if I'm not mistaken. The other thing, I see some confluence here on the silver chart. Yeah, just be careful. It could bounce off this kind of 4-hour trend support, but it is a red bar at the moment, and if it breaks through that, it's going to go all the way down to the money over here. All right, so just keep an eye on that. That might be of interest to you, but it's on a 4-hour analysis, on the silver Silver's not really as good a trade as gold. Gold moves a lot better than silver, but silver tends to sort of move around with the gold. Pleasure. That's fine. The HK50, yeah, totally. Yeah. Like I say, I tend to try and trade products that are more closer to my time zone. They're not way out and nailing me when I'm fast asleep in the middle of the night at 2 o'clock in the morning. I tell you, there was a time when I was trading those lower time frames for a while, and I would trade the Aussie dollar or the New Zealand dollar or something like that. 2, 3 o'clock in the morning, I'm up trying to sort my trades out because that's the time that they're running. And that's when I found it to be totally crazy, totally crazy. Trading those lower time frames is totally nuts. And I also realized that your more reliable systems are on the higher time frames, not the lower time frames. The lower time frames are not going to give you reliable setups at the end of the day. So this DAX was a good example of the 5-minute time frame. You're going to take long trades, and if you look at the day and the 4 hour and the 1 hour, they're all short. They're all pointing the downside. So I see now the thing is the US 500 open to the downside now. There's a good chance it could bounce then. So it might actually bounce off the support now and go long. Let's see what it does. But it looks like it might bounce and go long. Yeah, I don't really want to take a trade now. It's late in the day for me, and also it's Thursday. So let me see. I'll see how it goes. See what happens. But I'll wait for a green candle. But the mere fact that it's opened, sort of, yeah, given us a bit of a negative run, there's a good chance that it might just turn around and head the other way. Let's see what happens. See how strong this support is as well. Let's see if it's a strong support or if it's going to break it. If it breaks this, guys, sure. Looking at a serious downside on the US 500, eh? If it breaks this support, we're looking at all the way down to 53 again. And further than that, it could get worse. If it breaks that, we're looking at all the way back down to 51. So, yeah, if it breaks that support, big trouble. Big trouble for the US 500. But big money for us, because if it breaks that support, you got to go short. Going to make some money there. That's for sure. Only trouble is all your investments are going to see their ass for a while. But that's fine. That's how it goes. Dow Jones, yeah, that's broken through this money level here. So it seems to want to go down as well. The volatility index is on the move. Okay, the DAX is not showing any signs of strength. It's just hanging around on this level. Doesn't seem to want to go. Seem to come down, touch it, and go up, but now it's just looks like undecided candle to me. Looks like nobody wants to take the move. Okay, so France 40 short, big time. That's going. That's heading down. So the FTSE and the France 40, they're definitely weak. They're definitely going short. They're definitely running to the downside. The US 500 is busy deciding what it wants to do. That will move those whichever way. And the Nikkei will probably reach this trend support and then go long. Interesting. See what we get today. See which way we go. Funny if you look at different charts, how you get a different picture as well on different products for different brokers. Sometimes get a little bit of a different perspective on how things look. For example, this is the Germany 30 on the funded account, and it's in a totally different perspective to me. So if I look at this, but then I've drawn in my my supply area, supply of money, so I might get back up to there and then go short. Maybe we should just wait for it to get back up to there and go short. That might be a good short trade on the Germany. And then on the US 500, that all looks pretty standard. Looks like, you see it did go down. I thought it might turn and go up, but it looks like it wants to go short. Let's just see what it does on that support. See if it does anything on that support. So it's been an interesting session, and yeah, we're heading towards the 4 o'clock area on this side. You guys have been open for a while. Let's just see the Nikkei. Okay. So Apple's down, Tesla's up, Nvidia's down. Nvidia has a tech stock, so Nvidia, let's just have a look at the Nasdaq. What's going on? What's going on here? Little bit weak, but it's still bullish, still up there, still strong. It's also results season at the moment. There's a lot of companies announcing their results. So there'll be a few surprises to the upside, a few surprises to the downside. And that tends to move markets big time. So, like Meta was announcing their results. Google Alphabet was announcing their results. And it changes things around. Like the 4% is what they do. Let me just show you on their homepage. I think I can show you here. Here's their products. We've got this 25K account, right? So on the 25K account, effectively, this is exactly that. You got to make a 10% target. So we've got to get it up to a 10% target. Your max overall drawdown, in other words, if you lose more than 6% of the account, which I think on a 25 grand account, or 22.5, then you lose the account. And then your max daily drawdown is 4%. So you can only lose 4% in a day, which in their case, they reckon is about $1,000. So if you drop $1,000 in a day, they'll close your account. And that's the 4% drawdown rule. And then you have to buy another account and start again. And that's how these guys operate. That's how they all operate. These guys are a lot more lenient than most of the other guys. I must be honest, not on the percentage, but on the way you trade and how you trade and trading overnight and that sort of thing. But as far as the rest goes, I got to say it's much of a muchness. That's why I say, like, if you're trading with real money, then you can take 10 trades and you're risking 10% in the account. Doesn't really matter. You can control that. But with these funded accounts, you can really only risk 4% because that's your daily limit. If you go over that daily limit, then you've kind of lost it. So, yeah, we haven't lost the account, but it is more difficult than you think to maintain those accounts like that. But all it means is you can't take 200 trades. You can take 3 or 4 trades. That's all it means. And it's not the end of the world. You can risk $250 on every single trade, and you'll get there. That's fine. Yeah, Roger, I hold my trades overnight if I don't hit my target. What I don't do is hold long trades on index over weekends. I'll take a chance on a short trade over a weekend because what event's going to happen over the weekend that's going to send an index to the moon, make it long and make it really happy? Not much is going to send it long. So that I'm not too concerned about. I will take a chance if I'm short on a price. So if I go short on the US 500 because it breaks through here, I'll hold it over the weekend because no matter what happens, it's probably never going to go flying to the moon. But if you long on the other side, if it goes up and you go long, there's too many things that can go wrong over a weekend that can cause that index to crash. And crashes happen much faster than bull runs. That you'll learn over time. Every single time when you see a crash, it starts to rear its head somewhere on the Friday, and over the weekend it goes ballistic. And when you come back on Monday, you weren't able to stop out because your stop losses are not operating. And on Monday it opens a million miles away from your stop loss, and it opens a million miles away from where you're supposed to be, and your account's blown and all your money's gone. So yeah, I don't hold long trades on the indexes over the weekend if I can help it. And on the Forex side, you got to be careful both ways. But sometimes you can take a gamble depending on how you feel the world is turning at the moment, and also which currency you're trading against and that sort of thing. So on the weekend, you can look at the currency and say, could I take a chance or not? I prefer not to if I can help it. I'll only do it if I really feel comfortable doing it. But the indexes, like I say, I'll happily hold that short. The commodities, you can't call that. Don't try and call that. You know, for example, if you're holding Brent short, right, and the weekend comes along and something happens in the Middle East, it'll probably fly north. You'll come out on Monday and it'll be up here. It'll take you out as well. So Brent, I won't hold over the weekend either. Gold, I've been known to hold over weekends because gold doesn't tend to do the unthinkable over a weekend. But in my experience, anyway. That said, the last one or two crashes, gold did take a knock as well. But most of the knock occurs with the index itself, with all these indexes. If there's a knock in the US, it'll affect all the indexes, not just the US. So, yeah. Roger, on the overnight, yes, I'll hold overnight because there is only an hour gap closed and open. So generally that's a risk worth taking, right? And you've got your automated stop losses in, so the markets are open. Just make sure you've got 24-hour markets. Then you're fine. But if you hold it over the weekend, you could have a problem. So I hope that answers your question there, Roger, that, like I say, we look to try and hold overnight, but not on the weekend. You know, Kokoro, it's funnily enough, yes, I did have a video on the volatility index, and in all honesty, I can't remember what I called it. I'd have to search for it as much as you would have to search for it. So let me just put you in the picture. If you have access to the volatility index, some brokers do, some brokers don't. If you have access to the volatility index, the simple concept is, and over here we can't trade it here, but what I normally would do, which I would do on my other broker, my real broker, is I'll buy it at 15. I'll buy maybe 1 unit at 15, and then it'll drop a bit to 14, and I'll buy another one, and I'll buy another one. I'm kind of doing what you're not supposed to do. I'm hedging it down, right? That sort of buy more as it goes into the negative. But that's because it's the VIX. So what I'm doing there is I know that the maximum that it really goes down is 10, and that's where my stop loss will be, below 10. And if it ever goes below that, then I think the world's kind of like in a really good place. Because for it to go below there, the world has to be in a really good place, because when the world goes bad, it goes up. Okay? So then what you do is you just hold that trade. I normally go quite deep into these trades. I've held them for months and months. But in between those months, these spikes are what occur. See these big spikes? This is what happens. You're holding, and whoop, there she goes. And that's where you make your profit. And on that last one, I made about 40 grand, just like that, one shot. So that's what it does. So what I normally do is I start buying in at around just over 15, and then I add more. I think last time it dropped to maybe 13, and I added more, and then it started running to the north side slowly, and then it just shot up, and it makes you all the money. And that's how you trade the VIX. The VIX, if you have access to the VIX, you can make a lot of money from it, but you've got to have access to it to make the money. Not everyone does, eh? And then Jam STR says you can use UVIX. Yeah, there you go. Just depends. The one I use is called VIX, but just see if there is a UVIX on here as well. Guess you got to be with that broker. Same thing, but this one's got a different level on it. Eh? Just be careful of that. See, it's got a different value. Okay, so just figure out what the values are on the UVIX. It's different to the VIX. Okay, this is 5, so yeah, you probably this one you just got to look back and just see how it runs, and you can just work on that. That one seemed to have been quite high. Just work on the UVIX that way. It's totally different to the VIX. The VIX in itself works in a slightly different manner, as you can see. It sort of runs around these areas. So yeah, in the past as well, it's had a run. You see it shot up, come back, shot up, come back. That's how it runs. Always runs that way. The VIX can make you a lot of money if you trade it right. So go look for my video. Yeah, go find the video, and it tells you all about how you can trade that and how you can make money with it. Makes you money every single time without fail. But you've got to be able to hold it for a long period of time, eh? And just remember, when you're holding the VIX, you're paying fees every night. So make sure you can cover those fees on the size of your trade. So watch the size of your trade, because it's easy to become greedy and put a huge trade in because you know somewhere down the line you're going to make money, but then you've got to pay for that trade every single night because you have to be long. You can't be short. You have to be long. So, and then long trades you have to pay. Just remember, okay, so just be careful of that as well. Just watch out for that. I think I did mention it in the video that you've got costs on a VIX. Okay. Okay, Scott. Yeah, it's a pleasure. I'm glad it's helping. I'm glad it's helping a lot of people, and like I say, I enjoy doing these videos, and I am on my YouTube journey, learning YouTube. And as trading is a lonely game, YouTube has given me an option to get to know people, to get out there as well. Now, the YouTube journey, just like the trading journey, there's a lot of things that I have to learn. There's a lot of things that I'm figuring out as I go along, and it takes time. So the videos won't be perfect every time, but we try our best and we try and improve them all the time, and we try and make them better as often as we possibly can. Now, we shall see where we come out and how it works out, because as I said to you guys before, I started this channel because I wanted to make 1 or 2 videos explaining that you can't make $1 million in a day. And it ended up where it is now, which is fantastic. It's gone quite well. So I'm quite pleased with that. And it's a fun journey. I'm learning a lot as we go about these things. I mean, I never thought I'd be able to do a live show. never dreamed I'd be able to do a live show on YouTube. I've had a couple of channels before, done small things and whatnot, but I never really bothered with them. And even this channel, I'd made 1 or 2 videos about the Bitcoin thing, and then I left it and I never did anything with it for a few months. And then I decided to make a video about these guys saying you can turn your $100 into $1 million. I said, no, this is rubbish. I need to tell the guys that's rubbish. And then it became this. It became huge. So it's growing and it's big. And yeah, I'm enjoying it. So it's fun. That's great. So I'm learning a lot. I'm figuring it out. And I'll make it as good as I possibly can as we go. Yeah. And that's what it's all about at the end of the day. It's all about learning about trading. And as long as you learn about trading, that's where we go. How's it, Jabba? Welcome, man. Yeah, you've come pretty much at the end of the video because we are going to close up just now. I've got to feed the dogs and whatnot. Scott, I go live every Tuesday and every Thursday. What I do is I put out a training video every Monday, Wednesday, and Friday for you guys, so you can go over the process over and over and over again. You'll find I repeat myself quite often because I don't change my system every 5 minutes, and I always tell you guys don't change the system every 5 minutes. So I go into quite a lot of detail on the system that we trade with and the psychology that we use to trade with so that we can get it over. And then on Tuesdays, we have the live at the Euro Open session so that we can sort of get that time zone in. So it's more in the morning on my side. And then on Thursdays, we have the US opening session, which is more the morning in the US and afternoon on this side, just so that I can cover both bases at the end of the day. And it's more for you guys to chat to me and to ask questions and to, get the information over and that sort of thing. And I also did it so that we can play with this funded trader account together just for a bit of fun, and take trades on it and that sort of stuff. So yeah, that's the live. It's Tuesday and Thursday. And then I also try and throw in a video for the weekend, which I normally make on a Friday, sort of about the way the markets went for the week and where I think they might go the following week. And then obviously I've got the, because it gets a bit overwhelming, I've got the members videos in the morning, which I do for the members, which is just a rundown on the markets and that sort of thing. And it's a quickie and the trade of the day and that sort of stuff. But yeah, I don't want it to become too overwhelming. I'm still finding my feet with YouTube and growing. So we'll see where that comes out. Buying stuff for the channel, getting some stuff like this, and yeah. Making it better as we go. Yeah, that's great. So I hope that will help you guys. So yeah, it's all about trading. It's all about you guys learning to trade. Look, you won't find that this channel is as popular as some of the others because the other guys tell you that you can make $1 million in a day and they put the 5-minute charts out there. And I said the other day, I can't believe how all the scalpers are all make so much money and how they always profitable and how they win every single trade. And maybe I should become a scalper, man. Obviously not. Obviously not. Not the case. No. I don't know how they do it on their videos and how they get you to believe that they're winning every single trade and making such a lot of money. But yeah, that is a fallacy. That doesn't happen. I've actually seen pro traders sitting in pro offices struggling to make a living. It's not that easy, guys, to make a living doing this, but you can do it. And it's a good way to live your best life and to enjoy life. But if you think that you're going to take $100 and turn it into $1 million in a week, you just got to think for yourself, whatever trade you're in now, whatever work life you're in now, you didn't learn to do that in a day. I don't think anyone learned to do their job in a day. And the same goes for trading. It takes time. You got to figure it out. Just like now at the moment, I'm trying to figure out my YouTube journey. I didn't do that in a day. It takes time. It takes time. You figure things out as you go and you learn your trade. So these guys that tell you that you can just make $1 million and it doesn't work like that. In fact, there is theoretically, you can take $1,000 and turn it into $1 million in 10 trades. It is theoretically possible, but practically impossible. And I'll tell you why. It's because for every trade that you take, you've got to take maximum risk on every single trade. The probability of winning 10 trades in a row is almost totally improbable. And there's been a couple of traders that are really good traders that have tried it. And normally when they get to 5 or 6 trades, they bomb out. And there's been 1 or 2 that's on their 6th or 7th try of trying to do it, and they haven't managed it. It's so improbable that you're going to win 10 trades in a row. And you can imagine for yourself, you've got to maximize every single trade to do it, to do that. So yeah, it's very improbable, theoretically possible, but very improbable. If anyone ever wants to try it, maybe one day I must give it a go. Yes, Blake, we do have an open VIX position now with one of my brokers. And it's I can't even remember what size it is now. It's a good few contracts in, and it will do extremely well. So the other one, like I said, made quite a fortune last time. So the VIX position will always make money. See, like now it's on 21 here. So mine is slightly different to this for some reason or another. My real one, this is slightly different. Mine is not sitting at 21, it's sitting at about 19 or so, but it's okay. It's just different products, different markets that I made. It's okay, it's not a big deal. But it will make me a nice profit, as it always does. I'm waiting for it to shoot to 35 or 40 when the US 500 goes crashing down through this thing. It's going to make another, 40, 50 grand. Just like that. Boom. I love those things. Those are so worthwhile. It might be a bit late for you to get in now, by the way, because it's already running. But you could still make profit. Is it the 3 candles that show you the demand money zones? It's still not clear which areas to choose. Yes, it is. So for example, you don't only have 3 candles, you can have 6 like this. What you do, Roger, is you see all these red candles here. Let's say that was 3, but I mean, it's like 6 is fine, it's great. The more the merrier. You got giant candles going down like this. So now there's a supply of money because you see the green candle before the red candles. You see that's a green candle before all the red candles. That's where the money is. What you do is you take the blocky, you draw it over the green candle, and you draw it across. And that is a supply of money. At the bottom, they call it a demand of money. That big deal, the other way. But this is going this way. So what you're waiting for now, it's actually quite far away though, but if this was to shoot back and reach this level, it'll take that money and go back down. Normally with 3 candles, you see now it doesn't always work. Where support and resistance does work, it doesn't always work. And I'll show you why it doesn't always work. You see there's 3 green candles going there. Let me just take this area out here so you can see it. There's 3 green candles there. So you would have had a demand of money over here. Okay. And not only that, you see it was in a flag pattern, and I drew a line here under the pattern to say that was pretty much a flag support, and it would resolve to the upside. And there was money lying in this area because there was the 3 candles. So you've got your demand of money. There was some orders lying here. Look what it did. It broke straight through. Took all the money, broke straight through and headed down. So it doesn't always work. Okay, it's not always that strong. It's just something that you can use as confluence in your trades. That would have been a pretty good trade. It would have looked good. But what you do is, like with anything else, you wait for the candle to confirm. So for example, if this supply area is here, you wait for this to come back up. If it was to come back up, take the money and then give you a red candle coming out of there. You don't trade it on a green candle when it reaches there. You wait for a red candle to come out and convince you that it's actually going the other way. Then you can take the trade down. That's how it works. Same with support and resistance. But your strongest levels are your support and resistance, and your trend support and resistance. Your trends are your strongest. These supply and demand levels are very much there as a sort of interim, in between sort of handy thing to find, a handy trade. So let's say, because it's, you're looking for these levels on your daily chart. These levels are levels that you're kind of finding in your 4-hour, 1-hour charts. So they're very light levels. They're not as reliable as the main levels, but they are there and they can be taken. Often they will work. There's a higher percentage of them working than them failing. Let's put it that way. I would say divergence fails more than support and demand fails. Support and demand is actually normally quite a successful way to trade. It works quite well. So you want to use that. And then obviously you get what they call fair value gaps, which these fancy guys in ICT and that what like to use. There's nothing wrong with them. They do help, and there is some money lying in those areas as well. But I don't want to overcomplicate it. I don't want to confuse it. And as I say to you guys, it's not really about the squiggly lines as much as it is about the money in the background and how you approach the market with your psychology, how your business plan approaches the market, and how we manage our risk is how we make our money. These squiggly lines, all they do is tell you what the probability is of any trade on any given day at any given time. So as long as you understand that, then you understand the market. That's why you watch my videos over and over again, because I reiterate it over and over again, and I hammer it in so that eventually it just becomes like daylight, and it's easy and it works for you. Because the other guys, what they try and do, and I don't like to talk anyone down, by the way, I never do, but they will try and teach you that the system win rate and everything will make you your money, and it won't. That's not what's going to make you your money. A win rate is not going to make you money. What makes you money is how you approach the trading. That's how you make the money. Wait for the trades to come to you. Don't try and force the trades, and the market will always lull you into a false sense of security. Don't forget that. Don't ever forget that. That's a really important statement from my side. So, yeah, it's not like we have a million viewers on ever, but it is fun and it is good. And I'm glad to have this close-knit community close by to me and working with me. And I'm hoping that you'll all become fantastic, profitable traders soon. I'm missing one person here today, and that's Daniel. I actually wanted to thank him because he sent me a lot of information on solar power that I was asking for. And Roger, thanks for asking that question. Yeah. Good show, guys. If you've got any other questions, you're welcome to ask them in the comments on the videos as well. I might not answer all the questions in the comments because some of the answers are too long. So what I'll do is like I did today, I save up the questions and then I'll go over them in the live videos if I can. And then obviously I do make videos on during the week which cover most of the issues, but I try and bring them up in the live shows. So if you can come back for the live shows or just rewatch them or something, then your answers will normally be in the live show. So today I answered the $5,000 account, the RSI, the supply and demand, the drawing the lines on the chart, trade of the day, and the overbought situations. So those were questions that I got in the comments through the week that just, for me to answer it, it's going to be just such a long answer. So it's much easier for me to just answer it in the videos for you guys and give you the replies. So I hope you guys enjoyed it today. And I hope the stream was lekker. I enjoyed it. It's been fun. And the next stream is on Tuesday on the Euro session again. As always, I will come back with a fantastic video tomorrow, which will give you some explanation on the markets again. And then over the weekend, we'll run over where the markets are going, because it looks like we're getting a really nice correction, which means we'll get some really nice trades in. So that's why I'm empty on trades at the moment. I'm looking at where we're going to land up and where's a good spot to get a trade. Before you go, what are the little red and blue arrows? Oh, those are on trades that we're taking on this chart. That's all. I believe. Yeah. I think I took some trades there and they just left a trace. They left a tracer. Sometimes they do. Yeah, that's fine. Not every chart does that, but not every broker does that, but they leave it. It's probably a setting that I've got in, and if you buy and sell or whatever the case, then it leaves a tracer in on the chart. That's all. The red and blue arrows don't mean anything. I didn't put them there. It's like a buy and a sell or something like that. No problem. Okay, so hope that helps. And till the next live video, I hope you guys have a fantastic trading day today and tomorrow, and a lovely weekend. And I'll spot you on the rebound, spot you soon, and chat to you soon. Have a good one. Thanks for being here, guys.